And as I say, you know, I've been doing my best to upgrade you all. We have a wonderful panel here, and the CEO of Angelicoussis Group, Dr. Maria Angelicoussis, joins us. Dr. Maria, if I can have you on the stage first. Dr. Maria is with us, yes. Wonderful to see you, and if I might have you take the second table here. I would ask our ushers, somebody to do a quick water change for me. Can somebody do a quick water change on the tables here? That'll be a big help for us. We need this done as quickly as possible, please. I won't leave you on your own, Maria, for too long, so just give me a second here. From Bahri Oil, the Senior Vice President, Commercial and Operations, Hisham Alnughaimish is with us. Hisham, lovely to see you. Come on, it's the end of the day. Come up to the front, please, please. Humor me on this one. We have lovely seats up here, and I'd love you to join us. Anybody. I even have front row seats going for a song. I'll be joining you there. Lois Zabrocky joins us now, the CEO of International Seaways. Always wonderful to see Lois. Thank you so much. From McQuilling Partners, John Schmidt, the CEO, is with us. Wonderful, John. We'll get everybody set up here and do a quick change there. And from DNV Maritime, the Global Director of Special Projects and Services, Ali Shehab. So wonderful to see Ali Shehab, as always, and I'm delighted that you're all with us. But please, a big warm welcome now for our moderator on this. He's going to bring some great energy and life to this panel. We've got everybody on board. A very warm welcome for the CEO of Tankers International, Johnathan Lee, is going to moderate this session. I'm really looking forward to it. Now, we will have time, in a little time, for questions. He'll give us the nod on this. And again, Omar, where are you? Zaki, where are you? Okay, here's my two front men here, so they'll be keeping an eye on you, and they're your key guys if you've got a question. So be thinking about it, because we have lots to play for in this one. I know it's going to be a very, very interesting, timely, and very, very urgent conversation that we're having at this Maritime Congress. So I leave it to you, Johnathan. Thank you so much. Let me get off the stage and not block your...
Well, with that sort of build-up, I'm looking forward to it as well. So thank you very much indeed. Good afternoon, ladies and gentlemen. My name is Johnathan Lee. I'm the Chief Executive Officer of Tankers International. We act as commercial agents to 70 VLCCs. We have had a 23-year relationship in the Kingdom. During that period, we have safely moved over 160 million tons of crude oil on behalf of the Kingdom to their chosen destinations through over 600 spot fixtures. The remit of the debate today we have is quite large, so you'll please forgive me in as much as I think we've taken the decision, or I've taken the decision, to look at a number of key issues which affect our industry at the moment. A shipping sage, and it always strikes me that shipping sages are quite good in retrospect, but not very good actually telling us what to do, once said, shipping thrives on chaos. I think it's true to say that the last few years have been anything but mundane. The financial crash of 2008, the emergence of China as both a political and economic superpower, the aggressive use of sanctions by the USA almost at a drop of a hat, the Japanese tsunami and the resulting of Fukushima, and lately, the tragedy of Brexit in my own country, and tragedy it most certainly is. And then lately, the worldwide pandemic that started in March 2020, followed almost immediately by the war in Ukraine. I think the last two events in their own right, one would believe, were probably going to change things, but happening so quickly, one after another, I think the world perhaps is a different place now than it was prior to 2020. When it strikes me that people ask about the tanker market, it always strikes me that in effect they're asking about the VLCC market, because the historic view used to be that if you had a good VLCC market, The trickle-down effect to the Suezmaxes and Aframaxes was relatively obvious, and then the products market followed on after that. But the interesting thing about today's market and the market that have observed in the last 12 months is that we've almost seen this in complete reverse. The products market was the first to come out of the pandemic. It has reacted much quicker than the crude oil market. When the crude oil market started to react, it reacted on the smaller ships, the Panamaxes, Aframaxes, Suezmaxes, and only lately have we on the VLCCs really joined the party. I'd just like to, at this stage, identify or talk with the panel about where they think some of these catalysts came from, especially on the products. And Lois, if you don't mind me starting with you, one could say your rather well-timed purchase or merger last year or 18 months ago with Diamond S and your acquisition of a large product tanker fleet was obviously well timed, but maybe you could talk us through some of your reasonings behind that and how you see the product market has developed.
No, absolutely, Jonathan. I think that in all of 2021, the world was sleeping a little bit in the sense that inventories were very high coming through COVID. So inventories were starting to decline. At the same time, consumption of oil products in the world was starting to resume. And, you know, we were in an absolute downturn in the tanker markets. The time ideally to do mergers is during that downturn. Of course, not knowing exactly when the market will turn up. And I think that the world sort of sleepwalked into the Russian conflict with Ukraine, and suddenly, overnight, you need product. Why product over crude? You have to refine the crude. So if you're in distress, and all of a sudden, you know, your ports are somewhat isolated, the smaller vessels, the 300,000 barrel, 50,000 ton MRs, can fit into the majority of ports. And you can bring diesel, which was in high demand from close locations, such as the US Gulf. And all of a sudden, the product market took off. And then if you add into that, the United States said, we're not going to import any product or crude from Russia. The US was importing about 600,000 barrels a day of heavy fuel oil. And suddenly, that threw the Panamax market into a bit of disarray, and we had to source heavy fuel oil in the United States from alternate locations. So you can kind of see how all of this began with the products and continues there, and then worked its way up the chain with Aframaxes and Suezmaxes.
On the crude side, as we said, on the Vs we've come to the party very late. Aframaxes, the smaller ships, have done better. Suezmaxes have done better. Dr. Angelicoussis, obviously you have some Suezmax exposure. Would you like to talk us through maybe how you see the different trading patterns on those ships?
No, I can, and I can try and link both. So firstly, it's a pleasure to be here. Thank you for inviting me here. I'm very excited to be on this panel. We have a fleet, we're a crude player, that's our focus. And we have a fleet of 35 VLCCs, 15 Suezmaxes, 1 Aframax, and 4 dual-fuel LNG VLCCs on order. When the tragic war in the Ukraine broke out, we did see significant crude oil trade flow changes, but initially in the smaller sizes. We saw Russian oil being diverted to the east, predominantly to India and China, so longer ton miles, and Europe replacing these barrels with oil from the Arab Gulf, the US, West Africa, and Brazil, also increased ton miles. This caused the Afras and the Suezmaxes to go up, as their trade is predominantly in the Atlantic. The VLCCs, which rely more on China for demand and for their business, remain subdued. As we know, China's demand year on year is a lot less due to the COVID-related lockdowns. However, in late spring, what we did start noticing was changing trade flows on the VLCCs. We saw a lot more movement from the Arab Gulf via Suez into Europe. We saw the US SPR releases, which were 180 million barrels over 6 months, and we saw VLCCs loading in the US, discharging in Europe. I think last month was a record month. There were 1.6 million barrels a day going in that direction. And also with Brent trading at a modest discount to Dubai, we saw some of the longer haul voyages, US to the Far East. So this is when the VLCCs started moving. Again, changing trade flows and longer ton miles.
John, what's your view about the products and the crude and how you've seen these changes?
Well, first, let me just say thank you to Hisham and the Saudi Maritime Congress for inviting me to speak with such an esteemed panel at this time. It's a very timely opportunity to speak about the market. And I think both Lois and Maria said it very well. On the product side, I think the momentum really got started pre-pandemic in that there had been a consolidation, continues to be a consolidation in the West of refining capacity, whether refineries have been mothballed or repurposed for other uses. And so where the new refining capacity is coming from is the Middle East. We expect 1.2 million barrels a day to be coming to market within this year and next, and the Far East. And so the ton-mile demand with the LR2s, with the MR2s, has increased dramatically. So I think we've seen this year alone ton-mile increase of about 7% on the LR2s. On the MR2s, it's roughly the same. In terms of the crude side, again, we see, from the bottom up, I would call it a moderated order book, and that applies obviously to the MR2s as well, but a moderated order book on the Aframaxes to start. And so, the Russia situation has really is going to keep a risk premium in energy prices and in shipping prices. Again, from where Russian exports are going to go and where vessel demand for the substitution. So, as Maria points out, for the VLCCs, coming late to the party, but now coming on strong to the party. U.S. SPR releases of 1 million barrels a day starting earlier this year, and recently announced that we're extending by another 10 million barrels a day into November. The latest batch of crudes coming is a light sweet, which really runs well, in Asia, runs well in Europe. So that's benefited the visas, benefited the Aframaxes. So that with, sort of Middle Eastern backfill into Europe again, with China expected to come on, it all looks very robust here.
I think the movement of the product from AG up to the continent, I think, has been a very interesting subject. Hisham, I mean, do you see that from a Bahri point of view continuing? And, for example, are we going to get to the nirvana of doing more AG US Gulfs on the big ships?
First of all, we are coming out from 2 years very bad market, in general, in all sectors. After we finish the COVID-19, I think the market start in all sectors, to move, and specifically, in February after what happened to Russia and Ukraine, that moved the market really, to a level where we see as an owners, acceptable. Okay, of course, nothing acceptable for the owners. Always they want to be higher. Okay, but at least to a level where we can keep, trading in a safe matter, and that's the most important for everybody, in any sector, either VLCC, oil, chemical, dry bulk. We need to reach to a point where the owners can, survive in a peace. We have a crew, on ships for 7-8 months. Because of the COVID-19, and we have, we had problems in and exchanging the crew, all over the world, and all this, we have bunker, very expensive. So everybody wants their, their commodities, coming in a cheap, shipping. It can be. It has to be, give and take. So we as an owner can be survived. So I believe now the market moving up slowly. I see, even in the other sector, usually VCC taking the lead. We saw this difference, after, in February 2000 this year. So, which is now the VCC coming. I think usually when the VCC move with the size of the VCC in the market, it's going to, slowly, but it's going to be in a good standard.
Well, I think either being a ship owner or working for a ship owner, you have to be an eternal optimist. Actually, it does appear now that we could be on the cusp of that point. But I'd just like also to understand the panel's view of how they see the market moving forward. Obviously, we've gone through some very, very difficult times on all our classes. The crude oil market, the products market at the moment looks really very interestingly positioned. Is this a start of a super cycle, or it's a different market? There's an old saying that the most dangerous words in the English language are "it's different this time." I think for many a ship owner that probably is an apt calling card. But when we look at the market today, is this the start of a bull run? It feels very different to 2020 to me. It's a completely different market to 2020. The dynamics seem completely different. But Lois, how do you view this?
So structurally, I say that we are set up for a very good bull run, for a period of years, which we really have not had in the last decade. Why? We have demand recovering. The world wants to get back to living. Ship supply, the orders have been few and far between on tankers. Many other sectors have sort of filled up the yards, and owners are disconcerted about what type of engine to order on their vessels. So all of these come together to make a very good construct for the tanker market. Are we going to be interrupted by recessionary influences? Is possible, but John and I were speaking earlier. In the last 20 years, the only time that the oil market actually lost demand, other than COVID, where we went to 85 million barrels a day, and that was never seen before, was after the Great Recession, where we went down by 1 million barrels a day. It doesn't feel like that. I mean, the IEA still has 2023 growing at over 2 million barrels a day. It should be in that rough area. Now remember, pre-pandemic, we were only growing at 1.5 million barrels a day, and that would have been considered an extremely strong year. So it seems to me that, the oil demand increases are somewhat more robust, and we're set up for a really nice run in tankers. That's my assessment.
Dr. Angelicoussis?
I'm a bit more cautious. I think it's hard to say whether we will have a bull run in the next 2 years. There's a lot of uncertainty in the world right now. Energy markets are very, very volatile. Looking at the negative side, which we always have to look at the downside, you have global inflationary pressures, central banks raising interest rates in many, many countries, and the fear of demand destruction and subsequent recession. However, what we do know is that this terrible conflict has caused change in trade flows, dislocations, increased ton miles, and a tight tanker market. When you look at the supply side, there's been chronic underinvestment in oil production. The Kingdom of Saudi Arabia is one of the few countries that's had the foresight to do that and increase oil production. And on the ship supply side, the VLCC and Suezmax order books are at record lows, 4% and 3% respectively. We have an aging fleet. 27% of VLCCs and a quarter of Suezmaxes will be over 15 years old by the end of this year. And then when you come with the upcoming emissions regulations as well, ships will have to slow steam. heavy consumers will become obsolete. So the tanker market should remain structurally tight, and we are overall positive. I don't know if there'll be a bull run, but I'm a bit more cautious.
Let's put it like, compared to what we've gone through in the last couple of years, anything is better than that. John, what's your view?
Yeah, I think that with shipping, it's always difficult to say 2 or 3 years out that you're going to have this bull run because factors come in that always mitigate it. So I agree with Maria's caution on it. I think that this market is lining up not like 2020. 2020 we had a very violent, if that's the right word, upswing for a very short time, which was the catalyst really for that was the COSCO fleet being sanctioned, taking that tonnage out of the market, followed by a decline in crude price. And as quickly as it went up, it came back down. And so 2021 was probably, and I'm dating myself here, but 2021 was probably the worst sort of tanker year that we've seen since the 90s. I think where we're lining up now is more in line with 2004 to 2007, 2004, 2008. Again, interest rate fears are a problem. Recessionary fears are a problem. We don't have the Chinese GDP at 8 or 9%. That's a problem. But I think what the pandemic actually masked was where we're at right now, or where we've been in the last sort of 4 to 5 months with demand. I think the pandemic really masked. I think we were going to be where we're at right now, probably a year or so earlier, a year and a half earlier, but the pandemic pushed that off. We have similar things happening, obviously, with the Russian dislocations. Another reason why we saw the smaller fleet advance before the larger fleet was because, again, similar to the COSCO situation, we had the Sovcomflot fleet sanctioned and taken out. And that's about 40 mid-sized ships. So looking at what the order book looks like now, we haven't had proper sort of deletions from the fleet like the dry cargo did after 2016, but where we're seeing the deletions, if you will, in conventional non-sanctioned trades, ships are disappearing to those other trades, and so that in effect is kind of a deletion from the fleet, and that will put supply pressures on. It's all a matter of how how the market's going to move forward. I think that I don't know that growth is going to be, or demand is going to be that impacted like it was during the pandemic or like it was after the Great Recession. To reference the IEA, I mean, they came out last year and said that they've sort of miscast demand for the last 8 years, right? And a lot of that's attributable to the petrochemical side of the coin. So I'm cautiously optimistic, let me say that.
Obviously, one of the difficult things, I think, on the whole of the crude space at the moment is this so-called ghost fleet. I mean, I think on the VLCCs, it's rumored to be 80, is it 90 ships? Suezmaxes, it's not that tremendously different. On Aframaxes, it's a lot more. And as you said, I mean, I think it masks a scrapping policy that is not taking place because these ships, in effect, are going to an alter trade. They will probably never come back into the trading market as we know it, but they are taking product out, albeit product out that most of the certain type of ownerships can't actually lift. So it's an interesting point. I'd like to morph the debate a little bit, if we can, into the energy transition. Dr. Angelicoussis, you mentioned that you have got a couple of dual fuel VLCCs. Lois, you've taken the view to order 3 against a time charter. I wonder if you could just talk me through some of your rationale in going into this. Was it, how do you see the whole space?
Absolutely. So firstly, at Angelicoussis Shipping Group, we take the energy transition incredibly seriously. It's one of the main areas we focus on. We believe in technical innovation and advancement. We have set up a standalone department, Green Ships, to focus on 2 main areas. Firstly, improving the efficiency of the fleet on the water through energy-saving devices, top-quality paints, voyage optimization, in-house performance monitoring, and in the future, carbon capture and storage on board. And secondly, we're looking at building the future fleets of tomorrow, large liquid CO2 carriers, ammonia carriers, and we intend to be significant players in that space. Coming to the alternative fuels, right now, overall, we are fuel agnostic. However, for the size, type of ships we have, which are large deep-sea tramping ships, dual-fuel LNG is today the best immediate solution. You get a 25% reduction in CO2 emissions, 90% reduction in NOx and SOx, and in the future you can drop in biomethane and synthetic methane to get you further along the pathway. Further beyond that, I believe ammonia will have a role, and after that, hydrogen. The problem with ammonia is we have to overcome the toxicity challenges, and that's what we're still working on.
Ali, could you come in here a bit on how does DNV see this?
Well, first of all, thank you for having us here. Now, the challenge, of course, that we have the dilemma of while the industry has the sincere will to decarbonize and move towards zero emission and neutralizing its emissions. At the same time, we have to continue while doing so, meeting the targets of the regulation. We have to actually continue using what we are using until everything is ready. So the dilemma here is that you have the regulation, and then you have the technology readiness, and then you have the fuel at what cost. And then this is where the owners actually facing with making the decision, because they have to set their decarbonization strategy, and then they have to comply from 23 onwards. And then it's not only the EEXI, then they have to meet the trajectory of the CII, and then reduce year by year until reaching 2030. Now, that requires actually further understanding, and it brings in a lot of uncertainty, and that's where we come here as a classification society, as well as advisory. We come in here to turn the uncertainty to opportunities and work closely with our clients and help them really to move in that direction. If I just walk you through how the whole equation is working. So basically you have the climate change challenge which is facing us, and that brings in the regulation. The regulation brings in the need for the technology to be available. The need for the technology to be available needs R&Ds. And R&Ds, or research and development, needs funding. And the funding, when it happens, of course, whatever technology you decide on, it brings in direction towards more electrification. Electrification brings in the need for digitalization. Digitalization brings in the challenge of cybersecurity, et cetera, et cetera. Summing all that, then you have the human element challenge. You need to adapt the people to be able to operate whatever you are bringing. You're bringing change, you have to manage it in order to reach where you want to reach in the future. So therefore, this is the current challenge of the ship owners, and that's where the industry cannot work alone. Maritime industry is, yes, it is in isolation. At some time, I used to call it the black sheep of all industries. But the collaboration is the fuel of the future, if you're going to think of it whichever way. But collaboration of cross industries. Maritime industry can work on bringing an engine which can burn biofuel or low emission products. However, I need to get it supplied to me from the shore side, and the shore side here you have the refineries which need to also invest as well. So in our maritime forecast to 2050, which we launched recently on 6th of September, what happened here, we have set all the different scenarios and where the projection of the future, where we see the different alternative fuels that are of the future. And in this regard, we foresee that the maritime industry has something of 8 to 28 billion USD of investment, whereby the shore side has something from 30 to 90 billion USD of investment in order really for all industries, whole nations really to reach the future of net zero 2050.
Lois, International Seaways, about 12 months ago, signed a contract with Shell for 3 dual-fuel VLCCs to go on 7-year time charter.
Yes.
To ask you the provocative question, would you have ordered them without the time charter?
You know, interestingly, when we got that phone call, we were super excited because to be able to work with the customer together as a partner, you know, is really the ideal situation for an owner. And I would say, you know, for all owners, we owe such a debt of gratitude to all the classification societies because all this innovation and all the engineering and the architects, they're the ones who are cracking this decarbonization puzzle wide open for us. And just kind of building on what Maria was talking about, the emissions profile from these dual fuel VLCCs will see them well into the 2040s. And that's so important for an owner. When we go to build a tanker, it has a 25-year life. So, you know, in order for us to have that, you know, a 40% efficiency improvement over a 10-year-old VLCC, that's not all just from the LNG. That's from having, as Maria was saying, the latest rudder, the latest propeller, you know, every possible feature that all of the classification society and the engineers can come up with in these ships. So for us, you know, it was just a fantastic opportunity, and the timing was excellent, and it's the beginning of the pivot. This is just the beginning for us because, you know, we need to have more decarbonized vessels, whatever that's going to look like, you know. So I think it's exciting for Maria and ourselves at International Seaways to be up here and sharing. We're, you know, there's only a couple of dozen dual fuel tankers that are even being built today. So for us, it's just really exciting to be on the cusp of that.
Can I just ask the panel in general, though, is that where does ownership sit with regard to the energy transition debate? It seems to me that owners are service providers. The history of owners building one-off ships, speculatively classed ships, has never been great, I don't think. But
Right.
This is something I think definitely we owe the next generation to invest time and effort into. But where are the owners on the? Are the owners, you, Abe, all of you, able to mold the debate with our customers, or in effect are we always picking up the bits, as it were?
I mean, I don't want to hog the mic. I want, you know, Hisham to be able to chime in there. But, you know, to be able to work with the customers, this is the ideal because I don't think we're going to get there without doing that.
Yeah. Okay. Ali?
Well, the industry has proven over the history that it's very resilient, so therefore it's very dynamic, and it works with how change, when it comes, it just adapt to it. Nevertheless, by history, also we know that ship owners like to wait for the last minute to make a decision, because it's a difficult decision really to make. But at where we are going now, it's difficult really for you to wait until the last minute and make a decision. The reason is because everybody has to comply, and then for complying, you need to have reached into a decision that I'm using this technology, and then I have to order it in time, and then it has to be safe as well. Also, I have to allocate a budget for it, right? And then I have to find a place where I can do the work and upgrade my ship in order to comply with the future regulation. So this is the dilemma. How are you going to set it? How are you going to do it? You have to start early. You cannot leave it too late. So we have to change the mindset. And again, everybody now still suffering from COVID times, losses, whatever. However, the industry is doing well. They're making good money at the moment. They're paying back the losses. And while this is all happening, they have to make a decision. It's a serious dilemma here. But with all this uncertainty, it brings in an opportunity, and where collaboration for different players, the stakeholders within the industry to come together and work on it, cross industries, not just in the maritime. This is the current situation that the maritime industry is facing. It is left alone to deal with the situation there.
It interests me is that it seems that the customers that you have on the dry cargo side are much further along on this debate with the ownerships than we are on the tanker side. And I find that an interesting question, actually. Maybe we can talk about it a bit later on. I'm just looking at the time. I just would like to move now to LNG. Some stark figures in LNG. Global demand for LNG is forecast to reach 78 billion cubic feet per day by 2030, a 60% increase on today's figure. June 2022 was the first month that EU imported more natural gas via ships than via pipelines from Russia. Not overstating things, it would appear that demand at the moment far outstrips supply. Dr. Angelicoussis, your family was one of the first Greek families to move into the LNG sector, and you've obviously had a substantive position there. Not trying to overstate things, but things look quite rosy at the moment. How do you view things?
I think we were positive on the LNG sector before the tragic conflict in the Ukraine, and most of our speculative new building orders were placed before February 24th. We have a fleet of 42 LNG carriers on the water, and 11 new buildings on order, which is obviously a substantial investment, and I think that shows you, how committed and what our belief is in the sector. We believe LNG is not only a transition fuel to allow the world to wean itself off coal, but also it will be a baseline to allow renewables to ramp up, and it will be a substantial part of the energy mix for decades to come. I work in million metric tons, so our forecast is 420 million metric tons LNG demand by the end of this year, growing to over 730 by the end of the decade. And this will be a substantial need for ships. We see Europe looking to replace the 155 billion cubic meters of Russian pipe gas, some through pipelines in Algeria and Norway, but mostly through LNG seaborne imports. And this has made the market very tight.
But I noticed in the last couple of days, Russell Hardy, the CEO of Vitol, saying European storage for LNG was just about full. Does that cause, do you think that's a problem for the market, or is it?
As a European, I'm incredibly happy this has happened, and I think it's been a huge success, what Europe has achieved in this time. Mm-hmm. Right now, the bottlenecks in Europe are the regasification capacity and the berth space. But as winter comes and there's going to be an increased demand, we will need incremental LNG imports. And we've seen now a huge change in trade flows. All incremental spot cargoes are being diverted away from Asia into Europe. Yes, that's shorter ton miles from either Qatar or the US, but it's a much higher volume. We have about 65% of our fleet discharging in Europe, and we're also seeing a lot of floating storage happening outside of Europe with laden LNG carriers.
Johnathan, can I just ask Maria a question on this? Since, do you see, Maria, in the coming years here and what the demand picture looks like, do you see the LNG fleet, or do you see a spot market coming? It's always been a term thing, but do you see that there could be a slight change in that?
That's a very interesting question. We were predominantly term players, and in the spring of 2020, we found ourselves with 5 LNG carriers on the spot market. I think we were about half of the spot market at the time, which shows you how small and limited it is. And I remember, we were quite scared. The market was terrible. My father said, look, just do what you can. We'll be fine. We've got most of the other ships fixed out. And being in the spot market taught me that gives you a real feel for where the rates are going. And in addition, we made a bunch of new relationships, which then when the market turned, we fixed the ships out on term. Yeah. I think the spot market will be there in a bigger form. I don't think it's ever going to turn into a tanker or dry bulk market, but I think it's going to increase in the next few years.
Interesting.
The new building order book on LNG stands at what, 46% of the current fleet, and if we compare that to VLCCs at 7, Suezmaxes at 6. I mean, it shows a very positive view of the market.
The order book, this is
Yeah,
for me?
yeah.
Okay. The order book is indeed very big. We've calculated it, I think, at about 41%, but it's a record high. We don't see that as a problem. With the predictions and LNG demand growth between now and the end of the decade, our calculation is that about 250 ships will be needed. At the moment, new building prices are extremely high. It's about $250 million for an LNG carrier. So that is putting a bit of a lid on any too much speculative new building orders. And then we come to the subject of the 200 or so steamships, which are in the fleet at the moment. They're about a third of the current fleet. And under current IMO regulations, they're going to find it increasingly hard to operate. So we view that these will be phased out in the next few years. And that will make the market tight.
It really is a very positive market outlook and very interesting. I think at that stage, I'd like to open some questions to the floor. If there are any questions, maybe we can hopefully answer them within the allotted time.
There's one.
Martin Crawford, Brand Lookout Maritime. Really interesting panel. Thank you very much for sharing your insights. My question is, with a growing gap between the ambition and reality on emissions, how do we get more collaboration between owners and charterers in the operational side of things, particularly in managing speed in order to reduce emissions in the short term? We've heard of some of the technical measures. Lois explained those. We've heard from Ali that collaboration is the fuel of the future. So I'd like to hear from the panel their views on how do we reduce emissions in the short term, make a meaningful reduction through operational measures, and how would this collaboration be sustained in a high freight environment? If the freight market were to pick up, how do we ensure that this continues? Thank you.
It always struck me as that when you've got quite a difficult question like that, the best person to ask first of all was the broker.
I guess that'd be me.
Because it gives everybody else a bit of time to think about what their answer is going to be.
You can answer that.
So,
Okay.
John,
Okay,
off you go.
Being the broker and the cynic up here on the panel, Johnathan referenced Russell Hardy at the APEC conference. Earlier this week, he came out and stated that the three things that are facing, we're in a trilemma right now with energy prices and the energy situation. And that's, what's number one is energy security. What's number two is lack of volatility in the price. And a distant third is, all of a sudden at the back, is sustainability. Again, I think in answering what Ali said earlier, that ship owners, wait till the last sort of minute to make the decision to go forward. It's always from the regulatory side, we're moving in one direction and all of a sudden, the goalpost shifts. So that kind of puts owners, on a back foot. In terms of collaboration, certainly from a chartering or from a major's point of view, each of them have their own idea about climate and climate control and sustainability. Some are moving into the wind space, some are moving into the LNG space, others are talking about carbon capture. So, from that side of it, there's not a lot of cohesion, if that's the right word. Really where it comes down to between ship owners and charterers is, at the end of the day, who's going to pay for it? And inevitably that always falls on the ship owner, regardless of how good the market is, or certainly how bad the market is. It always falls back to the ship owner. So I haven't really answered the question, but I just, these are the things that are that a ship owner faces and that the industry faces. So I think that the sustainability question is going to keep moving back.
Lois, you talked about working with our charters, and I totally agree with
Yes.
that, but do you see this as an avenue that we're going to be able to explore properly, working with our charters with these sort of questions?
Yeah, definitely. One of our key initiatives is, working to get in deeper with the customers to understand, what are the drivers. And to what John is saying, some of the oil companies don't want to do LNG. They don't see it as the bridge fuel. So they may be looking to, wait for a later prototype. But at the Global Maritime Forum last week, I saw a neat example with Rio Tinto and Starbulk. And they're not actually even building anything. What they're doing is assessing, okay, what are the key routes? And if you're going to be calling at the same ports, can you set up, they call it a green corridor, right? Can you set that up where you'll have plug-in on either end, where, you will do an ammonia engine? And I think that type of innovation where an owner gets together with a customer and you try to figure out what that technology is going to be is really a next step. But, we have to keep working to go deeper with our customers and, really try to innovate together.
I definitely agree. I definitely agree. Any further questions? The gentleman in the back row.
Dennis and
She's coming.
Thank you. So you guys have a lot of MR vessels built during 2007 to 2009. So I think each 15 years an MR should be worth about $20 million. So when we have an environment where we have a strong freight rates and strong prices in terms of inflation, how do you think about when to divest some of these vessels versus keeping them on multi-year charters or keeping them on the spot market? Thank you.
Dr. Angelicoussis.
yeah, that's for you.
Okay, so we tend to try and fix, depending on the market, about 1/3 to 2/3 on period, fixed rate, and this is our natural hedge against the market. In all three sectors, and as I just said in the LNG sector as well, we understand the advantages of being in the spot market and the information and relationships you gain, plus the upside when it goes. But in terms of taking long-term period charters, this is the backbone of how this company was built by my father. So strategic partnerships with first-class charterers for us, is the gold standard.
Hisham, I'm going to ask you that question the reverse way round, if you don't mind me saying, is that the question was obviously aimed at the owners, but as a charterer, I mean, there's never a great time to take a time charter, is there? Or is there?
Okay, maybe I'm in a better position as a charterer, as an owner. Okay, we have programs to fulfill, for Saudi Aramco, for its oil, and for others. So, in the same time, we are an owner when it comes to backhauls and even from the front haul. This is my opinion, but Maria and Lois, exactly, they know what they are doing. But in general, you have to have long terms. You have to play some in the spot market, because without the spot market, you lose, the scent, something coming here and tell you the market is going to move up without reading anything, without, knowing information. So spot market make you think, put you on your toes, and sometimes you ride the market when it's up. You watch yourself, even for the, by the way, for the long term, for the time charter and even other type of deals. Sometimes even I know some owners, we talk with Maria and Lois almost every day, okay, and we see the market, and I know where it's going with you specifically, Johnathan, that, we talk every week, how do we see the market? Is this the time to do a long term or short one? And I think dividing this is very important. To be
I agree.
in contact with them.
Lois, was anything that
It's interesting when you look at the spot markets or the time charter markets. The tanker market is a much more mature market. You have hundreds of vessels that are on that well-developed spot market. And I think that's why when Maria was talking about I do think it's a developing market on the LNG side, but if all the charters are choosing time charters, then you can be the one left out without a chair if you're in the spot. But as an owner, we are coming off of. I think it's worse than the 90s, John. I think it was the worst tanker market that I have seen in 30 years in 2021. And during that time, your vessels come off time charter. And now we, as owners, will wait for that market to mature into itself a little bit before we'll go ahead and lock in period business. So we're trying to lock in a return as opposed to just grab a time charter at a low rate that doesn't provide a return on investment.
Okay, thank you. I think maybe we have time for one more question.
Dennis.
Hello, Dennis Petropoulos from the Baltic Exchange. I hope this is a slightly simpler question, but it's something that does intrigue me. And I'd like to ask the panel, and maybe even including the session moderator, a view on this. There's been continuous refinery closures over the last 20 plus years in the USA and Europe. And that has meant a ton-mile increase in the product carriers. Post-COVID demand is expected to exceed supply, so there'll be an even greater growing increase, and power is generated from LNG, which is now leading the way. My question is quite simply, is that how and where do you see a ton-mile increase in the crude shipments? And how's that going to evolve over the next 3 to 5 years, considering that growing demand and definitely no more refineries opening in Europe and USA?
that is an interesting question.
This is the 40 years experience now. That's the question.
Well, I mean, I suppose I'll give you my answer to start off with. I actually don't think you're going to see ton-mile growth actually on our ships. I actually think China is most of our ships end up in one shape, form or fashion in China. So we are a Chinese-led story. But obviously with what's happening in Ukraine at the moment, we're now moving products from the US Gulf to the continent, West Africa to the continent. So I wonder, to some extent, we get lower ton-mile, but we get more volume in cargo. And if we get more volume in cargo, trading interregionally with a few cargoes that move out and a few more delays, overall the effect will still be positive for us. So actually, Dennis, from my point of view, I wonder whether we don't actually have ton-mile destruction that has been caused by this, but made up by a general increase in the amount of cargoes interregionally and more waiting time that we're taking on our ships. Dr. Angelicoussis?
I think there are new routes, as we mentioned, or routes that have been revived, that haven't really been in existence that much in 10 years. And this is causing VLCCs to move into different locations. But predominantly, as we said, China is our main market. I believe China will come back. We're hearing now about these product export quotas being granted that will stimulate crude oil import. And we are seeing the longer ton-miles from the US to the Far East as well, which hasn't been around for a while. So a bit of both.
Hisham?
To be honest, I mean, we saw this already, okay, when let's say they changed the goals. We saw Russia now is by changing going, to China and India, and other cargoes start to go to Europe from AG, and also US, Europe. It's already increased, almost the same or even less cargoes. And you see, and that's part of the, the fixing that we see, happening in the last 2 months. That's part of it. So without increasing the oil, I think it's already done. Now, the demand is coming. I'm sure, all the oil producers or, all countries are working to to have more carbon or even refineries, okay? Because I know that some of refineries has to be updated also. Okay, so I can see it's going to be there more demand, from or more production actually.
Thank you. Lois?
I think Hisham is correct. I mean, to me, the long-term construct is, growth in emerging markets. That's not the Western Hemisphere. And additional barrels coming on the market, Guyana, U.S. Gulf, Brazil. So your long-term construct is to move the oil, over the further distances. For sure, most of the recovery post-pandemic came from OECD. That's very unusual. The growth normally comes from emerging markets. So the emerging markets haven't really reasserted themselves. It looks, right now, WTI is $6 discounted to Brent. It's probably going to widen to the pundits say, maybe to 8. That's a great setup for the V's to go east. So I think what you're saying is true, Johnathan, that we've suffered in this way because of the Russia crisis. But, once trade settles back into its normal patterns, I think we will see the V's take their spot in that long haul.
And it's interesting with the US administration using the release of the SPR as a way of controlling prices. It's not good for you as an American, but it's probably good for the tanker market.
Yeah.
Yeah. Now we
John?
got to refill it, right, John?
Yes, yeah. And that'll come, I think, from the Middle East. I think the refill, everybody says it's going to come from Canada, but I'm not sure. I think it's really going to be Saudi-driven. I do think that U.S. exports, even after the SPR, if you will, closes, will continue because there is more production capacity in the U.S. that can be stretched. Right now, producers in the U.S. are holding back only because of demands from shareholders and Wall Street. Lois points out, Guyana is become very big and will continue to be very big in the supply side. Brazil had during the pandemic in 2020, Brazil was very active in moving VLCC cargoes. That moderated to moving Suezmax cargoes through 2021, and in the last sort of 3 or 4 months, we see a lot of activity back on the VLCC side, a cargo every day, every other day. In terms of other supply, we see Trans Mountain Pipeline opening at the end of 23 into Vancouver, where Westlake Terminal is Aframax constricted, but those barrels are coming to the tune of probably 30 Aframaxes a month. And do those get transshipped into VLCCs? Ecuador, that whole west coast, I think, of the Americas is ripe for production. So, I think, could ton-mile demand moderate? Yeah, and VLCCs really make up around 60% of ton-mile demand. So, this year we saw around 5% ton-mile demand growth. And I think it will continue. So.
Okay, well, I think we've overstayed our welcome by 15 minutes. I'd like to thank the members of the panel for your very insightful comments, and thank you very much indeed.
Thank you.
Thank you. Thank you, Maria.
Careful there. Thank you all so much. And a big thanks to you, Johnathan. Thank you so much, really, bringing us up to date for all of that panel, the information there. I think we're going to have a little family photo. Do you want to, while you're there, you may as well have one, yes, and see. There you go. So really, thank you so much for such great detail there and really, really bringing us up to date on the movements of ships, the dynamics in the market, where the growth is going to come from, what we can expect. And again, it's all about really looking at the environment. Interesting too, looking at the environment concerns, and while they may not be even among different ship owners, this is something that everybody needs to be responding to and is in very, very different ways. Use of technology there, working with the customers, all of that very important. But again, as we look around the world, I think we're hearing again, energy security is huge for everybody, and, you know, not just energy security, price volatility, and sustainability coming in there without a doubt. Now, this brings us to the end of today, sorry to say. You know, thank you for remaining with us here. Tomorrow we have so much going on, but we'll give you a little lie-in in the morning, so we will, because we don't need you back in this room until 10 o'clock. Now, that's not to say don't come early, because our exhibitors are going to be open from 9 o'clock. So it would be great if you come around 9, come and visit the exhibitions, say hello to them, have a cup of coffee, relax, take your time. So by the time you're in here sharp at 10 o'clock, you'll be in great form and you'll be giving me all of your attention, because tomorrow we're looking at the green transition outlook, decarbonization and future fuel, training the marine workforce, big data and digitalization, managing risk in the supply chain, and we'll also have a shipping line keynote. So be here on time. We have lots in store for you tomorrow on this great second day of the Saudi Maritime Congress. Once again, thank you so much for being here, and we'll see you all in the morning. Have a lovely evening. Thank you.